Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, August 1st, 2023. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. What you'll notice right away on the first trading day of the new month, we have our new pivots for the month. Higher value relationship for the pivot range versus last month, very similar to what we've seen here over the last several months. And what that does is it creates kind of a staircase for price to step on and head higher up the price ladder here. And if we're going to do that again this month, we would likely see some sort of weakness here into the pivot range to begin the first few days of the month. And then from there, you look for price to step on it and push higher. The next upside target here could be around the 47.50 zone and perhaps into the highest level, 48.08. That's the previous year's high price. So any pullback here, say it perfectly hits 45.20, which is the midpoint from last month, or say it hits 45.50 here, 4,500 rather, that could be an opportunity to push this thing higher. That could be a 200 plus point move. At the moment, we have a very narrow 10 to 12 day range that is developed here, and the uppermost target here puts you at about 190 points of range. So a pretty significant move could be coming up ahead. Again, if the first pullback to begin the month is defended, we could be looking at a great squeeze ahead. A failure here, and you open up a return back toward recent lows. All right, let's take a look now at the NQ. Right now, the NQ showing a little bit of weakness. The previous session, a super narrow range. Very narrow range at the top of the previous week's range as well. The idea was if we start to push back down, especially through 15.8, that could open up a short-term rotation back down toward 15.5. 15.5 here would be right back toward recent support. 15.556 is the FOMC key level. So an intra-day decline here within the overall narrow range that's developing. Now that's what we've seen lately. Anytime we've sold off on a one-day or multi-day basis, it's kind of been within range. It hasn't been to new lows. It hasn't dropped. It's been within range, and after that, you've seen a reversal right back up. So we'll see how this develops here. Again, we could be looking at more weakness back toward 15.5, 15.550 to begin the week here. But even a pullback of that magnitude, say we drop as deep as 15.4, that could still open up an opportunity for a trap and reverse back to the upside, perhaps back toward the previous year's high. So we're looking for price to stretch for 16,564 up ahead. That's the likely target. That's the previous year's high. The market has been working mostly all year to make it to that target. So we're looking for a completion of this move into that target at 16,564 ahead. The next pullback could get us there over the next month. All right, let's take a look now at crude oil. Here's a look at crude oil. Big time move here off the 67 level, back up, hit our 80 half level. That's the sticky target. And then up here, 83.50 is the top of the range. It's the FOMC key level. Big time level up there. Again, that could still be ahead. This has been a very bullish stretch here for crude oil. A continuation toward that 84 would be kind of rolling it back up after it dropped 20 points from that area. The last time we were here at 83.50, price dropped 20 points straight to 64s, and then from there we've had a long road to come back. So again, still working our way up to that target. Any pullback to begin the month could be bought for a continuation into 83.50 up ahead. Looking at gold futures, gold right now down about 1.25%. This one has gotten a little odd here, chopping around in this zone. Not the best price action here lately. We do have a little bit of a reaction to 2,000 here, though. 2,000, you can see after the rollover gap dropped, it's tried to be above that level here over the last day or so, and it's dropped right back. So any failure to get above 2,000, and you could be coming back to fill the gap and perhaps rotate back into 1940. But right now, very back and forth choppy action in this range. Not the best overall, but keep an eye on 2,000. Failure to get above that zone could pull prices back down a bit. Lastly, taking a look here at the YM. You'll notice the YM has been significantly bullish here. We had a 2,000 point rally from 33.8 straight to 35.8, and we're now up here in a very narrow pattern that's developed, almost a diamond shaped pattern on the intraday time frame. That's a lot of built up energy here, and we could be looking at a pretty significant breakout move very soon. Again, given the strength and the compression at highs, I'm usually inclined to see that any pullback could be an opportunity to trap, and then you look for a continuation to the upside. Again, any push to the upside could be taking you back toward the previous year's high. That's still 36.8 up ahead. Can we make it to that target sooner than later? Perhaps we can. So again, this narrow range of action right here could provide a very nice breakout ahead. Any pullback could be a buy for a continuation up until proven otherwise. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.